everyone, it's Kelly and welcome back to CUMIC Weekly, where we bring you the latest Chinese steel prices and market trends every single week. If you're new here, just hit the subscribe and like buttons right here. Don't miss out on any future updates. At the beginning of this week, the Chinese steel prices continued to go up, driven by high prices of raw material. But it wasn't long before a significant downturn took place. In front of such wild market swings, traders and investors are understandably becoming more cautious. With pig iron production maintaining high level, we've witnessed noticeable price increases in iron ore and coke over the past 2 weeks. Simultaneously, more than half Platts index of iron ore reached a 6-month high, leading coke manufacturers to request price hikes for their products. In accordance, Chinese coke futures also hit a 6-month high as well. So what led to the subsequent fall in the steel prices? Just last Wednesday, the Fed decided to keep the benchmark interest rate steady for September. However, they dropped a hint, suggesting another rate hike later this year, followed by a rather extended period of high interest rates. As a result, US dollar soared past the 105.5 mark, putting even more pressure on the commodity markets. And yes, you guessed it right. Iron ore and steel futures, well, they took a bit of a tumble. Now let's zoom in and examine the supply and demand details. This week, China's apparent steel demand rose by more than 61,000 tons, and total steel inventory dropped by 300,000 tons. However, steel production has been going up dramatically, with inventory reduction less fast than last week. Plus, when we look at apparent demand, even though we saw a slight uptick, it's still hanging below the levels we used to see at this period of the year. Therefore, market players suspect that the usual peak season wouldn't play out as expected. So what can we expect in the short term? We believe that with steel production ticking up and hopes of peak season demand starting to wane, the supply-demand picture isn't exactly painted in bright colors. Steel prices are likely to lean heavily on cost support in the next few weeks. In addition, the domestic microeconomic support in China hasn't been enough, and the relentless strength of the US dollar is putting the brakes on any upward momentum in the steel market. Combining factors stated above, we anticipate that Chinese steel prices would continue to fluctuate in the foreseeable future. Well, what's your anticipation for the Chinese steel market? If you enjoyed this video, don't forget to subscribe to our channel and give us a thumbs up. Just hit the subscribe and like buttons right here. See you next week. Bye-bye.